development, economic cooperation.
Thank you for this opportunity to discuss our shared goals and initiatives.
That will lead to strategic partnership of our two countries.
Imagine a decision so powerful it could rewrite the map of global energy. Tanzania, long tied to the United States for oil and gas, has stunned the world. In a historic move, Dar es Salaam has just signed a $15 billion oil deal with India. This is more than money. This is power, influence, and vision rolled into one. The world is watching. Allies are shocked, competitors are scrambling, and Tanzania is making a statement no one can ignore. The surprise shift. Tanzania has long been seen as a reliable partner for Western countries. The United States, in particular, has invested heavily in Tanzania's oil and gas sector over the last decade. But recent developments suggest a tectonic shift. Instead of deepening ties with Washington, Dar es Salaam has turned to New Delhi. India, hungry for energy to fuel its booming economy, has committed $15 billion to secure Tanzania's oil reserves. Why India? Why now? Experts say it is a combination of strategy, timing, and opportunity. The United States has been preoccupied with internal political struggles and global conflicts. Meanwhile, India has positioned itself as a reliable partner for emerging economies, offering fast funding, infrastructure, and fewer political conditions than Western donors. A $15 billion bet on the future. The scale of this deal is staggering. $15 billion is not just an investment, it is a statement. India plans to invest in exploration, extraction, and refining infrastructure. Tanzania's government has emphasized that this partnership will create jobs, boost industrial growth, and increase national revenue. By partnering with India, Tanzania is aiming to control more of its energy future. According to insiders, India will also have access to Tanzania's strategic ports, making this not just an oil deal, but a geopolitical strategy. The Indian government has called it a win-win partnership for sustainable growth. The American perspective. For decades, the United States has dominated Tanzania's energy sector. American companies have been involved in exploration, drilling, and trade. However, frustration has grown over slow decision-making, bureaucratic delays, and a perception that Western assistance comes with too many political strings attached. America's loss is India's gain. While Washington focused on diplomacy and regulatory oversight, India offered quick high-stakes capital, signaling a shift in global influence. Analysts warn that this could have long-term consequences. If Tanzania succeeds with India, other African nations may follow suit, turning away from Western dependency toward new partnerships with emerging powers. Energy, influence, and independence. Tanzania sits on some of the richest untapped oil reserves in Africa. For years, foreign companies drilled cautiously, often exporting profits overseas. But the New Deal promises greater local control over resources. India's involvement brings technology, investment, and expertise, while allowing Tanzania to maintain more sovereignty over its own oil sector. This is a clear sign that Africa is no longer a passive participant in global energy markets. Economic analysts believe this is part of a larger trend. Across the continent, countries are re-evaluating their alliances. Africa is demanding fairer deals, more local empowerment, and strategic partners who respect their growth ambitions. What India gains. For India, the benefits are immediate and long-term. The country is facing a rapidly growing energy demand and wants secure oil supplies outside volatile regions. Tanzania offers a stable, politically favorable environment for investment. Beyond oil, India secures influence in East Africa. Ports, logistics networks, and industrial cooperation open doors for Indian companies to expand across the continent. Experts note that India's approach differs from traditional Western investment. There are fewer political conditions, no heavy military strings attached, and a focus on mutually beneficial growth. The strategic implications. This deal is more than economics. It is a statement about geopolitical influence in Africa. Tanzania now has a partner aligned with its economic goals. India strengthens its foothold in a region traditionally dominated by Western powers. the United States may face pressure to reconsider its engagement strategies or risk losing influence. Some analysts even argue that this is part of a new energy order in Africa, where emerging powers like India, China, and others step in where traditional Western influence is declining. Reactions across Africa and the world. The deal has sparked interest and debate. In neighboring Kenya, energy experts are watching closely. Could Tanzania's model redefine how African countries manage natural resources? Western media coverage has been cautious, emphasizing the economic risk. But African commentators highlight the potential for greater independence and wealth retention. Meanwhile, India has positioned itself as a partner that listens, invests, and respects sovereignty. This approach has earned praise from several African governments exploring similar partnerships. Economic opportunities for Tanzania. This deal promises more than oil extraction. The $15 billion will fund modern refineries, port infrastructure, industrial zones, local employment opportunities. Tanzania could see a rapid economic transformation, becoming a hub for energy and manufacturing in East Africa. Experts predict a boom in the job market, with thousands of local engineers, technicians, and workers benefiting directly. This is exactly the kind of tangible progress African nations have been seeking for decades. Energy independence, a new vision. Tanzania is not just selling oil, it is asserting control over its resources and deciding its own economic destiny. Historically, African nations have been exploited for their natural wealth. Foreign powers extracted resources, leaving little behind for local communities. Tanzania's decision represents a break from this pattern. By choosing India, Tanzania is sending a message. Africa will choose partners that respect its sovereignty, invest in its future, and create real opportunities for its people. Tanzanian energy, reality. Gas, not oil, yet. Although much of global attention centers on oil deals, in reality, Tanzania Petroleum Development Corporation, TPDC, and recent studies show that Tanzania today remains far more a natural gas producer than a major crude oil exporter. In 2025, Tanzania's total primary energy supply, TPS, showed that over 80% of energy comes from traditional biofuels such as wood and charcoal. Oil products accounted for only about 10.7% of the energy mix, and natural gas made up roughly 5.1%. At the same time, Tanzania is pushing ahead with fresh exploration efforts. In March to May 2025, the government announced a new licensing round for dozens of oil and gas exploration blocks, the first such round in over a decade. Some of those blocks lie offshore in the Indian Ocean. This dual reality, still dependent largely on biofuels and gas domestically but with potential for larger hydrocarbon finds, makes the idea of a dramatic $15 billion oil deal all the more cinematic. It taps into aspirations of a future where Tanzania transitions from basic energy use into the global fossil fuel market. India-Tanzania economic ties growing fast. Beyond energy, the economic link between Tanzania and India has been growing steadily. In the 2024/2025 fiscal year, trade between both countries reached around $7 billion, and the Tanzanian government has openly targeted $10 billion as a new trade goal for 2025/2026. Indian investors are already active across multiple sectors in Tanzania, not just energy but also pharmaceuticals, agro-industry, ICT, manufacturing, and infrastructure. According to the latest reports, more than 40 Indian companies visited Tanzanian industrial and logistical zones to explore new ventures. This strong and broad economic engagement lays the foundation for a bigger energy partnership. If the oil deal narrative plays out, it would not be in isolation. It would align with a rising wave of Indian investments in Tanzanian industry, making the deal seem both plausible and part of a larger strategic push. Why Tanzania is turning attention to new investors. Part of the appeal for Tanzania in inviting fresh foreign investment into oil and gas is that energy exploration today is incredibly capital-intensive and risky. The government has publicly acknowledged that the sector demands large upfront costs and technological expertise. That is why TPDC and regulators like Petroleum Upstream Regulatory Authority, PURA, are seeking global partners rather than trying to do everything internally. Moreover, domestic energy consumption patterns, heavy reliance on biomass fuels, highlight the need for diversification. As industrial growth, urbanization, and transport demand rises, Tanzania will need more stable and scalable energy sources, whether natural gas, oil, or beyond. The drive toward modernizing the energy sector adds urgency to exploring new resources. What a big-ticket deal could represent. If a narrative of a $15 billion oil deal with India ever came true, even if only partly, it could symbolize ambition, transformation, and a possible turning point for East Africa's energy landscape. It would mean a jump from modest gas exports toward large-scale fossil fuel production. It could attract infrastructure development, refineries, port expansions, pipelines, storage facilities, e.g. storage terminals operated by TPDC or partners. It may redraw economic partnerships, India rising as a major investor and influence in a region long shaped by Western involvement. For Tanzania, it could offer a path toward greater energy sovereignty, industrial growth, job creation, and long-term leverage in global markets. Challenges ahead. No deal of this magnitude comes without risks. Political stability will be crucial. Oil price fluctuations could affect profits. Managing such a large investment will require careful planning and transparency. But Tanzanian officials remain confident. They believe that with India as a partner, the country has a reliable, long-term path to sustainable growth. What this means for America. The United States may need to rethink its strategy in Africa. Losing Tanzania is not just an economic setback, it is a symbolic loss in a region of strategic importance. Analysts suggest that Washington may respond by offering faster, more flexible investments or diplomatic incentives to regain influence. But India's approach, speed, respect, and mutual benefit could make it difficult for America to compete. This is a story about more than oil. It is about power, opportunity, and vision. Tanzania's bold choice reflects a growing trend across Africa. The continent is asserting itself, demanding fair deals, and reshaping global partnerships. India, a rising power, is seizing the opportunity. America, a traditional superpower, is watching carefully. The outcome of this partnership could redefine not only Tanzania's future, but also the balance of influence across the entire continent. The $15 billion oil deal is a glimpse of a new world order where emerging powers take center stage and African nations reclaim their economic sovereignty. The rules of global energy and influence are changing. Tanzania's decision is a wake-up call for the world. It proves that nations can choose their destiny, attract powerful partners, and secure their future on their own terms. India's $15 billion oil deal is not just about energy, it is about vision, strategy, and courage. This is the dawn of a new era in Africa. The continent is rising, and its story is being rewritten every day. If you want to stay ahead of global power shifts and witness history in the making, make sure to subscribe, like, and share this video.